All right, I'm back. Let's rock and roll. Dig into this. We'll probably take a short lunch break in about an hour, but right now we're going to talk about technical patterns, guys. Okay, so a lot of the things that we've discussed up until this point have had to do with market cycles and market trends. All right, now we're actually going to figure out and learn how to take advantage of those candlestick bars that you learned about, those trends that you learned about, those market cycles that you learned about, support and resistance. We're going to figure out, well, how do you actually profit from it? How do you actually make money from it? Okay, that's what this chapter is about, technical patterns. Okay, facts do not cease to exist because they are ignored. Aldous Huxley. Okay, guys, this quote is in here for a reason. It's in here because what you're going to learn in this book, this course, this seminar, is tremendously valuable information. And you need to heed that information and that advice. Just because you don't listen to it at times, because this will be you, doesn't mean that it's not relevant. It's like a teenager, shushing off their parents when their parents tell them, you know what, listen to me, I've been there, I've done that, trust me, don't do it that way. And the teenager has to do it that way anyway. They have to do it their own way, so to speak, because they need to learn their own way. Well, you're going to do some things in trading that you probably shouldn't do, all right? But that doesn't mean that this stuff isn't still relevant, if that makes sense, okay? So the three patterns we're going to talk about, and they're my three favorite patterns, okay? Three of, all right? Buy and sell setup, 3 and 4 bar play, and combination plays. Combination plays are awesome. You're going to love them, okay? So as technical traders, we're always looking for the higher time frame bias, which is the trend, uptrend, downtrend, sideways trend, so that we can get a firm direction of the stock. Once we get the direction of the stock, then we drill down to what we call an entry time frame. All right, and the entry time frame is how we take advantage of the higher trend. So you look at it, oh my gosh, we're in a stage 2 uptrend on the daily chart of Microsoft. That's great, but how do I find an entry? That's when you drill down to the 2-minute, 5-minute, 15-minute, get a lower time frame defined entry. And we do this by using technical patterns, okay? As it says, guys, in the notes section, there are a lot of patterns to choose from here at Live Traders, okay? Today, we're going to delve into 3 of them. I think 3 of the more successful patterns, although they're all successful. Don't be a jack of all trades, guys, especially when you begin. Master 1 or 2 of these, okay? There are a lot of these patterns taught in professional trading strategies, okay? A lot, 10, 15 of them, okay, or more. But today we're going to focus on 3, and these 3 should get you into profitability if you listen and heed the advice and follow the rules. Okay, first one, buy setup. There are 3 main requirements to a buy setup. Okay, number 1, stocks has to be in an uptrend. Okay, stage 2 uptrend. Remember we talked about the market cycle? We talked about the skinny jeans and Jennifer Aniston and all that. We want the stock to be in a stage 2 uptrend. Okay, it's possible you can take it from a double bottom or a retest transition and you're thinking, what the heck is that? Remember back here when we talked about multiple concepts converging in an area? I'll bring it up. Remember, we talked about this, okay? We talked about this right here. We talked about this. This is also a buy setup. That's what I mean by a W bottom. We're not going to talk as much about W bottom buy setups right now, but this is what I mean by a buy setup and a W bottom, okay? Or a buy setup and a W bottom. There's another example. Okay, that's what I mean by that when you go, well, what does that mean when he says a double bottom retest or transition? We're not going to focus as much, but that's what that means. So in an uptrend, you need 2 or more lower highs denoted by LH. So that means lower high, 2 or more. In this case, we have 3, right? Lower high, lower high, lower high. That's the pullback part. That's the pullback. You're going to buy the stock when the next bar breaks above this bar's high. Okay? Next bar. I don't care if it's 2 bars later, 3 bars later. That's when you're going to buy it, when it breaks above this bar's high right here. So in this case, pullback, pullback, pullback. The green bar forms. You're going to buy it right there. So that little blue line, you're going to buy it right there as it breaks above the red bar's high. And then you're going to put your stop loss under the red bar's low. Put your stop loss a nickel under it, a penny under it, a dime above. It really depends on the time frame. If you're, if you're trading on a monthly chart, you might put it 50 cents or $1 below. If you're trading on a 1 minute chart, you might put a penny or two below. Okay, so you're going to buy it right there, stop loss right there. Your first target, this is important, your first target is the prior pivot high, right here. That's the prior pivot high. This is your first target area. Take either 1/3 or 50% of your trade off the table in that area. So sequential pullback, guys, with, sorry about that, sequential pullback with less than a 50% overlap. Okay, 45-degree angle is nice. That's ideal. You're not always going to get perfect 45 degrees, but you understand what I mean. You don't want the angle to be too steep, guys. If it falls too fast with wide range bars, something is up. Okay, if that happens and it falls straight down, not at a 45-degree, but straight down, likely the bounce will be shallow and then it'll fail. So you don't want that. You want a smooth pullback, 45-degree pullback. Okay, sequential. See this where it says less than 50% overlap? See this red bar? It's overlapping about 50%, right? Right here is about 50% of that bar. And right here is a little less than 50%. That's what I mean when I say sequential pullback. Just a nice lower low, lower high, all of that. Very, very beautiful and smooth. Okay, let's take a look. Whoo, that's a good one. Okay, now, remember I said, not every stock is going to give you a perfect 45-degree. This one's a little steeper than 45 degrees. Okay, so wide range bar breaks above resistance to the left, right here. Moves up. Remember what I said. When you're too far away from the moving average, you need a pullback. Well, you're too far from the moving average. You need a pullback. So you get a pullback. Lower high, lower high, lower high, lower high. In this case, we got 4 of them. Not 2, but we got 4. Notice there's 2 resting bars. The entry is going to be right there, right around, was that 43.10-ish? Your stop's going to go right around 43.05. Wow, that's really tight stop loss. That's an unwall trade. Okay. You're going to buy it right there. Stop loss there. First target right there at 43.60. This stock was pretty damn impressive. We'll talk about this chart later. You're going to see it multiple times. There's actually 3 trades on this chart, right? Actually 3. But your first target's going to be right around 43.60 on this chart, right? Actually 3. But your first target's going to be right around 43.60. Guys, in this case, you have like a 40-cent first target, okay, with about a 5 or 10 cent stop. So you have a 4-to-1 first target. That's a really nice play for a 5-minute chart. Okay, really nice play for a 5-minute chart. Hey guys, by the way, what is this over here? You see this volume I'm pointing to? What is that? What kind of volume is that I'm pointing to? Talk to me. Let me know. See if you guys are really, really assimilating this information. What type of volume is that I'm looking at right there? Boom. Ending volume. Perfect. I love it. Love it, love it, love it. Right? 1, 2, 3, 4, 5, 6 bars up. Super far from the moving average. Wide range bar, little topping tail, big volume. It's over. Move's finished. It's it. It's done. Walk away from this bad boy. Although if you do, you made a ton of money, right? Over $1 move, about 10-to-1 on your money. Okay. Here's one that I traded, okay, on Tesla. All right. Notice you broke above this area at 242. It bounced up. Got kind of far from the moving average on that bounce up. Far from the moving average. It pulled back. Lower high, lower high, lower high. Bought it at 242.40. The stop loss 241.65. Boom, $1,500. Okay, $1,500 bucks. Notice I didn't ride this thing all the way up to the top. I got about 2-to-1 out of this trade, maybe 2.5-to-1. I think it was like a $600 risk. Got 2.5-to-1. Okay. So by 244.35 up in here, I was out. Why? Second wide range bar, far from the moving average. I said, oh, I'm good. I got almost 3-to-1, 2.5-to-1. I'm good. Chopped around and continued higher. Notice again, I'm going to point it out every time it happens. Every time you get far from the moving average, it pulls back. You get far from the moving average, it pulls back. It's very, very common. Expect it. Okay, guys, take a look at this real quick. Tesla, $1,500. AIG minus 300. That's a 50% batting average. You still made $1,200 that day. That's what I mean by getting 2-to-1 on your trades, 3-to-1 on your trade. I only had a 50% bet. I was wrong just as often as I was right. But when I was right, I won big, and when I was wrong, I lost small. That's trading in a nutshell. I want you to take a look at that because there was only 2 trades that day. One didn't work, one did work. 50-50. But when you win big, and when you lose relatively small. But even if I had lost 600 on this, you still ended up with almost $1,000 that day. That's okay, right? How would you decide on when to sell on this trade? 2R movement. For me, Timothy, it would be 2R. It's rare I get more than 2R. This trade was a little bit right around 2R, a little bit more than that. It was 2.5-ish, something like that. Okay, but for me, that's what it is. Now, depends on your patience level. It depends on your time constraints. Some people only have 30 or 40 minutes a day to trade. Some people have 5 hours to trade. For me, I find that my patience level doesn't allow me to get much more than 2-to-1. Once they start going more, I start to get jittery, and I say, oh my gosh, I have to sell some of this. You can also sell half and then sell the back half at a higher price. Sometimes that helps traders, right? You get a nice move up, get some money, sell half, put some money in the bank, right? And then ride the back half out, okay? I found for most traders, 2-to-1 is the sweet spot. There are some traders who are patient, will hold for 5-to-1. Some traders that scalp out at 1-to-1, although you have to be very good to do that. But I found that 2-to-1 is the sweet spot. And you don't have to be right that often, 40 to 50% of the time. Okay? All right. Here's another example, guys. Notice, again, far from the moving average, you get a pullback. Lower high, lower high, lower high, lower high, right near the rising moving average, just above it. You're going to buy it at 71.50, put your stop at 71.10. That area, which is 72.50-ish, about a dollar, right? That's your first target. That's about 2-to-1. For me, I would be done here. I would literally get out of the entire position. For many of you, you're just going to ride it up bar by bar. Bar, raise the stop. Bar, raise the stop. Bar, raise the stop. And you would have been stopped out at like 73.20 or something. You would have made $1.80 on a 40-cent stop. You would have about 4 or 5-to-1. Notice what makes this trade so great. We haven't gotten there. We're going to get there in the next chapter. Multiple time frame analysis. This is the same stock on the same day on the daily chart. Notice this is resistance, pivot resistance, pivot resistance, pivot resistance. The stock gapped above resistance. We're going to talk about gaps later on. Gapped above resistance and then gave you 2 entries, an entry here and an entry here. So 71.50 is above that resistance area. This is perfect. Okay. Olivier, it depends on the platform you have. Some platforms you can set as a percentage. For example, you want to trail it 10% back, 20% back. Some of them you can just drag up your stop. Some of them you have to cancel it and replace it. It really depends on the platform. But yes, some of them will automatically do it, and some of them you have to manually do it. Yes. Okay. Guys, this is what you need to be doing every day. You're going to start with the great gap. We'll talk about it later. Start with the great gap. Drill down to a 1, 2, 5-minute chart and find an entry. In this case, there's 2. There's one here. There's one here. Guys, that's trading right there. That is trading. Okay. There's another example. Notice the stock got above resistance, the red line, moved up. I've been saying it 100 times. I'll say it 101. Far from the moving average, needs a pullback. Right, that wide range bar, that's igniting volume, right? It's the first bar of the move, but it went up quite a bit, pulls back, leaves a bottoming tail at support, at the rising moving average. You're going to buy it right here, 49.50-ish, stops 49.20, 30-cent stop. First target, 49.80. In this case, only about 1-to-1. Continues up to 50.50. Stock goes $1, it's 3-to-1. You have another opportunity to add to your position at 49.80 right here. Notice, far from the moving average, consolidates back to the moving average. It's a key. You're noticing it on every chart. It happens. Okay. Both of these buy setups pulled back in a smooth manner to the rising 21 MA at or near support. That's key. At or near support. These are the types of buy setups you want to be looking for. Make sure to only enter buy setups that are in uptrends. There's an exception to the rule, and it's covered in professional trading strategies. We'll cover it today. Notice again here, gap up, guys, above resistance, pulls back into resistance. Also note, or pulls back into support, sorry. Also note, far from the moving average, pulls back to the moving average. Lower high, lower high, lower high, lower high, lower high. Buy it right here, 33.50, stop at 33. First target is about 35.50, so about 4 to 1. Second target, 37.50. Guys, this is an intraday trade on a 5-minute chart. Okay, that's how good this thing was. It went from 33.50 to 37, $4 move on a 50-cent stop. Okay, that's pretty good. That's pretty good. Those are buy setups. This, guys, that's the prototypical perfect buy setup. Moves up, pulls back, moves up, pulls back, moves up, pulls back. This is, I mean, look at that line. It's just perfection personified. Okay, this one is very nice, but it's a little bit more advanced. Slightly, not a lot, slightly more advanced, but still very good. Same concept. Okay, same concept. Those are buy setups. They are relevant and valid in all time frames at any time of the day. The later in the day you go, past lunchtime, you probably want to move up to 15-minute time frames. Sell setups are the same exact as a buy setup, but they have to be in a stage 4 downtrend. Okay? Yes, Timothy, that's something we cover in professional trading strategies, but you would absolutely add to your position, particularly if I go back at 49.80 and you'd raise the stop to 49.60. You'd have a cost average of about 49.65. So you're basically, your stop loss would be break even, and then it keeps going higher another 60 cents. You would have made probably 7 to 1 on this thing by that point. Yeah, pretty good stuff. Yep, it's exactly what you do. So, same concept. 2 or more higher lows, right? So higher low, higher low, higher low, higher low. Now, you're going to short it when it breaks this bar's low. So go over here, higher low, higher low, higher low, higher low. Oh, boom. It breaks that bar's low. Short it right there. Stop loss up here. Okay. Same situation. First target, prior pivot low. Okay. Let's take a look. Ooh, this is a beaut. Okay. Stock gaps down, moves below support. See the support at 960-ish? 980 and 960 is where support is. You hear me say it a million times, far from the moving average. Far, far, far from the moving average. Bounces. Okay? Topping tail. Red bar. As soon as it breaks that bar's low, short it. Stop loss here. So, you're looking at shorting this right around 935-ish. Stop loss 945, call it 15 cents. First target $9. You're in at 935. You got over 2 to 1 to your first target, and then it continues lower down into the 860 range. Guys, this thing went 75 cents on a 15-cent stop. 5 to 1. Now, you get down here, guys. What type of volume is this right here? Right here, see this red volume right there in the bottoming tail? What type of volume is that right there? What type of volume is this? Talk to me. Ding, ding, ding. Excellent. Wonderful job. Ending volume. 1, 2, 3, 4, 5, 6, 7, 8, 9 bars down. 9. Count them. 9. And then you get a volume spike. It's going to bounce. 100%. This time it bounced shallow, chopped around, and pulled back. It's probably going to retest and then bounce, honestly. It's probably done going lower. Okay? So, if you took half your position off at $9 and then you saw that bottoming tail, walk away. You're done. Try to get, 870 or something, but you're going to put your stop above 880, 881, and you're done. So you got $9.80. You got an $8.90 average exit on an 8.30 or 9.35 entry. That's a 45 cent. You got 3 to 1 out of this. Very, very, very nice. Okay, and you did it in 2 hours. Okay. Same chart, guys, on this one, just a different look at it, a different view. Okay, on this, I'm not going to go over it. You can see it. You short there, stop here, goes lower, bounces, chops. Now this one, they look the same, but they're not. This happens to be Google. Okay, support right here. Gaps down, drops. I'm going to make the same comment. Look how far you are from that moving average. Okay, starting to get some topping tails. Back at that resistance point, right? Resistance point. Okay. Short it right here, maybe 549. Put your stop right up in the 552, $3 stop range. Okay. First target is like 543. So you're looking at $6. That's 2 to 1, and it continues lower down in the 540 range. You end up getting a $9 move, 3 to 1. Beautiful. Just money. Let's look at another one. Ah, interesting. Stock gaps down, moves below support, okay, below support, which is at 37.40-ish, okay, right here. Drops, okay, far from the moving average. Expect a bounce. Okay, lower high, lower high, lower high. Nice. All right, sorry, that's lower low. This one, higher low, higher low, higher low, higher low, right? Another higher low. You're going to short it right here. That's roughly 37.20. Stop loss is about 12 cents. Yes, it's that tight. Goes down to 37 is your first target. So it's about a 20-cent target on a 12-cent stop. So almost 2 to 1, not quite, almost. Look what happens. Look what happens here. It finds some support. It does not continue lower. It bounces back up and trends higher. Note, not all trades work or hit target. This is why we have protective stop losses. Guys, you would take this. It's in a downtrend. It's got 2 or more higher lows. It's a smooth pullback with little overlap, right? All that's beautiful. Nothing wrong with this. Just didn't fully work. Maybe you sold half here. Maybe you didn't. Maybe you did. But it didn't fully work. I put this in here on purpose. Take your stops, guys. Okay, if this thing comes back against you at 37.30, whatever it is, you walk away. Maybe you got half out, so you made a little bit of money. Maybe the market bounced. Maybe a news report came out, something. Who knows? But they don't all work. That's okay. It's okay. You don't need them all to work. Don't expect them all to work because they won't. Moving on, guys, to the next pattern, which is a 3 and a 4 bar play. It's my absolute favorite pattern. Okay. Well, the combination one is my favorite, but it's a combination of this pattern. Okay. This is a great scalper's pattern. It's actually a great pattern for core trading as well, but it's a momentum pattern. That's why I like it. I don't have a lot of patience, so I love momentum plays. Okay. So the first bar, this is really important, guys. Everybody messes this up. Everybody messes it up. The first bar must be a wide range igniting move, right? So bar 1 has to be the first or second bar of the move. Note it says this is very important. Please heed that advice. Wide range bar means double the size of an average bar. Double the size. Pick a chart. Let's pick any chart. Let's go back to this chart. Okay? Pick a bar on here that's twice the size of an average bar. Well, you have to visually look at that. So if you take a look in here, these are average type bars, right? Average bars, average bars, average bars, average bars. That's a wide range bar. That's a wide range bar. That's a wide range bar. Okay? That's what I mean when I say a wide range bar. A bar that is roughly double the size of an average bar. So if an average bar is 50 cents, a wide range bar is $1. But again, an average bar on Bank of America is different than an average bar on Google or Amazon. That's why you have to visually do it. Okay, so first bar must be wide-ranged. It should be breaking through resistance or support on the short side. And it has to be the first or second bar of a move. You are not going to have a 3-bar play up 4 bars. I get it all the time in the trading room from people. Oh, Jared, check out this awesome 3-bar play. it's like the 5th bar up and then it's forming a 3-bar play. No, it doesn't work that way. To be a true 3-bar play, it has to be the 1st or 2nd bar of a move. Okay? I want to make that clear. The 2nd bar, or the 3rd, depending if it's a 3 or 4-bar play, okay, has to be in the upper 50% of bar 1. So if this bar is $1 right here, $1, this bar needs to be 50 cents or less in the upper 1/3, upper 50%, that range. Okay, we want it to stay in the upper half because I want it to still show that it's strong, right? I want to see that the buyers have not completely left the stock, right? So the wide range bar shows commitment from the buyers. Okay, that's the igniting bar. Bar 2 is a resting bar, and it's showing that the buyers are just taking a small break. See, if this bar goes too much down, too much further down, too much lower, now weakness is creeping in. I don't want weakness. I just want resting. I'll repeat this. I don't want weakness. I just want a resting period. The 3rd bar is the blast off. Boom. You're going to buy it right here. Right there. Okay. Right there. Stop loss down here. Whichever bar is lower. 2nd bar or 3rd bar. Whichever bar is lower. Stop loss. Right there. Note, the color of bar number 2 or 3 does not matter. I don't care if this is green, green. I don't care if it's red, red. I don't care if it's green, red, red, green, and any other combination you can think of. They just need to be in the upper 50% of the 1st bar. That upper 50%. They should have relatively equal highs. Okay? Relatively equal highs. Okay? See it? Relatively equal highs. And then you're going to buy it when it breaks above that area. Beautiful play, guys. Gorgeous play. Okay? Same on the downside. Wide range bearish igniting bar. Breaks below support. Okay? Breaks below support. Resting bar, continuation move. Let's take a look at some of these bad boys. Ooh, these are so beautiful. Oh my goodness. Okay, red line. Always look to the left, remember? So we have some resistance, right? $66. Consolidation, pivot. Stock is struggling to break 66. Why? I don't know. Don't care, but it's struggling to do so. Wide range bar takes out that pivot. This is the biggest bar on the chart. It's the biggest bar you've ever seen. Okay? Wide range bar takes that out. 2nd bar resting in that upper, in this case, upper 10% really. Okay? This could be the entry bar, maybe the next bar. Okay? It's really hard to see if it broke 67.50, but it looks like an entry bar. So you're in at 67.50 with a stop loss at 67.10. Guys, it went $2.50. 40-cent stop loss. So what's that? 6 to 1? Okay. Now, 1, 2, 3, 4 bars up. Topping tail, volume spike. Move is over. Topping tail, volume spike. Far from the moving average. Move is over. 4 bars up. Topping tail, red bar. Far from the moving average. Volume spike. Move is over. Notice how I keep adding something to it, which makes it more and more and more reliable. I just added 4 things to that. Multiple bars up, topping tail, red bar, far from the moving average, volume spike. 5 things to say this move is over. This is exactly right. There's free money. It's exactly right. Whew. Beautiful stuff. Let's take a look at another one. Guys, notice everything I'm doing here. I'm showing you the wide range bar is taking out resistance. It's very important that you're above resistance. Wide range bar takes out the pivot. Over 51 is where you want to be. Why? There's nothing above it, right? There's nothing above it, this stock at 51. Wide bar, 2 narrow bars in the upper 50%, 25-cent stop. You buy it at 51, stop 50.75, it goes $1. It's 4 to 1. 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, an hour. An hour. 4 to 1. You risked $250, you made $1,000 in an hour. It's a pretty good return on your money. Lawyers don't make that much, right? Pretty good. Simple pattern. Beautiful pattern. Let's take a look at it on the downside. Okay. Notice I'm always drawing support and resistance lines. Pivot, bounce, pivot. Guys, that looked like a really nice start to a 3-bar play, didn't it? It never triggered though, did it? Wide bar taking out support, narrow resting bar, it never triggered. Okay, it never triggered. Bounces up, pulls back. 106.50 is the line in the sand, baby. Once that thing breaks, open the floodgates. Put on your parachute in the sand, baby. Once that thing breaks, open the floodgates. Put on your parachute because this thing's about to tank. What happens? Wide range bar takes out 106.50. Support is now broken. Narrow range bar is your resting bar. Third bar is your continuation move. So you're looking at 105.60-ish, okay? 106.20 is your stop, 60 cent. Boom, 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 boom. Goes down to 102.25 or something. $3.40. 4 to 1, 5 to 1 at least. Guys, again, 1, 2, 3, 4, 5 bars down, wide range bars, bottoming tail, huge volume. Volume spike after multiple bars down equals reversal, get out. That's it. Move is done. Take your money and run, be happy. Bar 1, wide range. Bar 1, igniting bar, breaking below support. 3, void below. Bar 2, narrow range, lower 50%. Bar 1 and 2, equal lows, boom, continuation. Money. It's a good question, George. I don't know. This may have been NVIDIA. I'm not sure. It was fairly recent, so it could have been, And then you could actually end up maybe buying this long, but that's a different discussion. 15-minute 3-bar play. Beautiful. Just gorgeous. Notice breaking support again. Every single one of these examples I've shown you is either breaking support or breaking resistance. Because when you do that, there's nobody left to sell into you or buy into you. There's nobody there. Nobody's home. Just white chart space, void below. Okay? So wide range bar, biggest bar on the chart, breaks below support. Narrow range bar is your resting bar. Okay? And then this third bar or fourth, depends on which one you want to take, ignites and continue, or it should say continues the move. So 106.70 entry, 107.25 stop, about a 55-cent stop, goes down to 103.50. $3. That's pretty good. 5, 6 to 1. Wide bar, far from moving average, small bounce, continuation. Now you got to move on, right? And notice it goes back up. Look how simple this pattern is. Guys, look how simple this pattern is. Would you be looking at pre-market levels in these? Timothy, I look at pre-market levels on every stock that I trade. When I form my gap list, the first thing I do is take a look at the pre-market levels. So yes, the answer would be yes. I would be looking at the pre-market level. Yep. Guys, I want to just continue to reiterate. Look, the pre-market level, Olivier Olivers, is the price area at which the stock traded post-market, which is after 4 p.m., and pre-market, which is before 9:30. Okay, stocks trade heavily, especially some stocks, during that time period. Okay, and you want to know, did a stock trade down to that area or above an area? Because oftentimes stocks can struggle to break those pre-market price support and resistance areas. We'll talk a little bit about pre-market. That's mainly a PTS concept. We will see 1 or 2 charts, especially, yes, George, correct, especially during earnings. Okay, so you have to love the simplicity, guys. Wide bar breaks resistance. Narrow 2 bars resting. You buy at 142, stops 141-ish, a little lower. Goes to 146.50. Straight up. Notice, guys, I don't have moving averages because I don't use them. All right. Gaps down, but it gaps under supports. 42.20 is support, 42.30. Wide bar, 2 resting bars, continuation. 41.50. Stop is probably 41.75. 25-cent stop. Stock goes about 75 cents. Beautiful simplicity. Gap above this area, right? Takes out the resistance. Wide bar, narrow bar. So I don't know, 42.40, stop 42.20 maybe, less than that, 20 cents. Beautiful. I don't know, $1.50 move, 7 to 1. You must appreciate the simplicity. It's beautiful. This is what I mean by you don't have to have spaghetti charts. That's it. That's all you need on your chart. Got the volume at the bottom and the price right there. Combination plays. The creme de la creme, the cat's meow, the bee's knees. This is the good stuff. They're all good. What we're doing now is simple. We're taking a turnaround bar, which is a concept from PTS, which is simply also called an engulfing bar. Must be wide range. It must be wide range. I repeat, it must be wide range. And we're combining it with a 3-bar play. That's all we've done here. We've taken a turnaround bar, we've combined it with a 3-bar play. Now, the reason that these are so good is because when you take a turnaround bar play, you got to buy it here, okay? You got to put your stop here. You got to buy it here, put your stop here. Well, if by definition, if that's a wide range bar, you're going to have a wide range stop. A wide stop often means a smaller reward to risk. Tighter stop on a highly viable pattern, highly reliable pattern, simply means a better reward to risk. So we're taking the greatness of a turnaround play, turnaround bar, we're taking the greatness of a 3-bar or 4-bar play, and we're combining them. Turnaround bar plus 3-bar play is a combination play. Okay? So it's very potent when a red bar gets taken out. So the sellers came in, the sellers came in, the sellers came in, the sellers came in. Boom, the buyers step up. That is very potent. Now all we're doing is getting one extra resting bar, so now I can use a 30% stop loss instead of a huge stop loss. And then it continues on the next bar. Oh, these are so gorgeous and beautiful and amazing and wonderful. Oh, love them. Okay, same deal. Notice support was broken, 118.40. Support was broken right here. Draw a line. Boom, 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 boom. Gaps under it, okay? Here is a failed 3-bar play. They don't all work. There's one at 118. It failed. It dropped 20 cents and then stopped out. It did. It did, okay? Get a green bar. Looks higher. Oh my gosh, buyers are stepping up. Sellers come in and say, I don't think so. You have a bearish turnaround bar with a narrow range resting bar and a continuation move. This is just HFT and market makers trying to screw people and suck people in. That's all that is. Then they come right back down, and now you have an unbelievably reliable pattern. These almost never fail. When you have a true turnaround bar with a 3-bar play, they almost never fail. Guys, you're looking at less than a 20-cent stop on this. Less than 20 cents on a stock that ended up moving $1.80. I mean, you're looking at almost probably 10 to 1. Okay, it's a combination play, and there is nothing better out there. Okay, here's another example. Stock gaps up and immediately sells off. Why? I don't know, but it sold off. The buyers come right back up and engulf the red bar. So now you have a bullish turnaround with a resting bar. Blast off. Okay, you can put the stop under here if you want. I usually put it under there. Why? Because it's a much better reward to risk. Much better. The only time I give it more room is if it's a really spready, whippy stock. Maybe you're trading Amazon in the first 10 minutes of the day. Then I'm going to give it more room. On any other stock, I'm not going to. I'm going to use the 3-bar play as the stop. Guys, you're in here at 73.25. Stop loss 73, 25 cents. It goes to 77 bucks. That's nuts. Almost a $4 move on a 25-cent stop. What's that, 15 to 1? 17 to 1? Nuts. Putting it all together. Combination play. Here's the daily. Always start with the higher time frame, okay? It gaps up, pivot here, okay? Gapping above this. So you're at $51 roughly. Oh my gosh, where's this? Oh, $51. Imagine that, right? So you have a gap up. See the red bar? That's the bottoming tail, guys. You see the red bar on the 5-minute right there? That's the bottoming tail on the daily. Red bar gets engulfed by a green bar. Bullish turnaround bar. That's the bottom tail. Where do we need to buy this to be perfect? 51. Why 51? Pivot here. Pivot here. This is like going to a Victoria's Secret store. I mean, that's how nice this is. This is ridiculous. Okay? You're going to buy it at 51. Your stop goes at 50-50. Okay? You can add at 52. Raise your stop 51.60 if you want. If you don't add, you buy it at 51. Stops 50 cents. Oh, wait, is that 55? That's a $4 move. 2, 4, 6, 8, 10, 12, 14, 16, 18 minutes. 18 minutes to get 8 to 1 out of a trade. That's stupid. Stupid good, right? That's incredible. Incredible. If you added to the position, now your cost average is 51.50. Your stop's 51.60. You can't lose now. 51.50. Twice the shares, 51.40. Oh my gosh, you're still going to get $4. Now, 15 to 1. Crazy, that's how good that is. Crazy, that's how good that is. Okay? Man, that's just impressive. Okay? Guys, this is just a sampling of 3 of what I would consider really, really good patterns that you can go out there and use in the marketplace. You're going to use the pullback, you're going to use the turnaround, combination play, and the 3-bar play to make money. Okay? I want you to take 2 of those 3. You could take all 3 if you really want. You could. I prefer you focus on 2 of them and really, really learn them to the highest level.